Good afternoon. Today our team will explain to you what the statement of financial position is and its components. To begin, the statement of financial position is an accounting document that has the purpose of informing about the current situation of a company. We can say that it's a list of everything the company has or owns, its debts and capital, among other assets. What are the objectives? First, to assess the financial health of the company. Second, to measure liquidity and its capacity to pay short-term debts. And third, to analyze profitability. And lastly, to make a strategic decision and inform investors about the company's status. This statement of financial position, it consists to assets, liabilities, and equity.
Assets are all the resources owned by company or entity. They can be tangible, such as cash, properties, and equipment, or intangible, such as patents and trademarks. Assets represent economic value that the entity can utilize to generate income in the future. There are several types of assets, including current assets such as cash and account receivable, and non-current assets such as property and plants. Additionally, there are financial assets such as stocks and bonds. Assets are vital for a company's financial health, indicating its ability to generate income and manage debts. Effective asset management improves efficiency and profitability, crucial for success. In summary, assets represent economic resources and are essential for operation success.
Liabilities in the balance sheet represent the financial obligation and debts that a company has at any given time. The analysis of liabilities is fundamental to assessing the financial health of a company. A high level of liabilities may indicate high financial risks, as the company may have difficulty meeting its obligation. Components of liabilities. 1. Current liabilities. These are the obligations that the company must pay in the short term, generally within 1 year, and include accounts payable to suppliers, short-term loans, taxes payable, among others. 2. Non-current liabilities. These are obligations that the company has in the long terms, during a period larger than 1 year. These may include long-term loans, mortgages, bonds payable, amongst others.
We can define heritage as the set of assets, rights, and obligations that a person or company has. The assets are the material and immaterial elements that the company has. For example, the machinery, the money you have in cash, the stocks of products, or the premises you own. Types of heritage. Heritage can be classified from numerous perspectives, given that it is a concept that has many edges from which to approach it. We will try to detail a few of them below. Depending on this nature, we can distinguish 3 types of heritage: economic, natural, cultural, or historical heritage. According to its tangibility, we can talk about tangible heritage, where we find tangible mobile assets, tangible immobile assets. And speaking of tangibility, the last point is intangible heritage. Finally, depending on your beneficiary, you can distinguish between personal assets.